Selling a home that's part of a trust can be complicated, especially the tax liability. A trust is a legal arrangement where assets are held and managed by a third party for a beneficiary. An example would be parents establishing a trust to own a property that in the event of their death would benefit their minor children. Trusts come in two types: revocable and irrevocable. A revocable trust can be changed or canceled by the person or people who set it up, known as the grantor. An irrevocable trust cannot be changed after it's established. A revocable trust becomes an irrevocable trust when the last grantor dies. This matters because it determines who pays any taxes for selling the property, primarily the capital gains tax on any profit from the sale. Typically, if you bought your home for $200,000 and sold it for $800,000, you would have a capital gain of $600,000. How much tax you'd pay on that profit would depend on many factors, including exemptions, how long you've lived in the home, and whether you're filing tax as a single or married couple. With either type, the trust would pay the tax if the proceeds from the sale were reinvested back into the trust. However, if the gains are paid to the beneficiaries, then the beneficiaries are responsible for paying the tax. It can get complicated. If you're the beneficiary of a revocable trust that became an irrevocable trust after the death of the final grantor, you may benefit from what's called a stepped-up basis. This means that you'd pay capital gains tax only on how much the property's value increased since the grantor died, not how much it increased since the grantor bought it. This can significantly reduce the amount of capital gains tax owed. If the grantor bought the home for $200,000 and it was worth $500,000 when the grantor died, and then you sell it for $600,000, then you would pay capital gains tax on $100,000 profit instead of $400,000. A house in a trust set up as irrevocable, or in one that became irrevocable before the grantor died, is ineligible for the stepped-up basis. Navigating the tax implications of selling a house in a trust can be complex. It's best to consult with an estate planning attorney or a tax professional who can advise you on your specific situation. That's it for now. Thanks for watching, and I wish you the best on your home selling journey.